All right, this is David Miller with the Miller Group of Keller Williams Realty again, and I have another expert on the line. I have one of our preferred lenders, Austin Grokoff, and he is with the Bank of England. You want to provide them your contact information real fast?
Sure. My name is Austin Grokoff. I'm with Bank of England. It's not England overseas. It's England, Arkansas.
That's right.
I can be reached on Facebook. I'm Austin Grokoff. Or you can contact me by phone, 407-718-9653, or at email at agrokoff@boemortgage.com.
Fantastic. So the reason I brought him on is if you've been watching the news or reading the news on social media, you're hearing this word called forbearance. And a lot of people don't have a really good understanding on what is forbearance and what does it mean when you do it. So Austin, can you define for us what does forbearance mean on your mortgage? If you wanted to do that, what are you actually doing?
Sure. So basically, when you contact your mortgage servicer, which is who you make your payments to, you do have the ability, not on all loan types, and I guess we can talk about that here in just a moment, but you have the ability to do something called a forbearance, which is where you give up the necessity to have to make your mortgage payment for a given period of time. Some of you that have student loans might be familiar with the term forbearance from student loan forbearances. This would be a mortgage forbearance. So it allows you to not have to make the mortgage payment for a set period of time, but it works differently than how student loan forbearances work.
Okay.
So it basically just allows you to not have to make a mortgage payment.
Okay. So let's say I don't want to make a mortgage payment for 6 months because I'm really unsure. I've lost my job, or I'm working part-time now in my job. So I hope it gets better, but I'm not sure. So does that mean that I'm no longer responsible for those 6 months of payment?
Yeah, so that's where there's a big difference between other forbearances and how a mortgage forbearance with the COVID-19 impact works. So what is different about it is if you were to forbear your mortgage payments for 6 months, we don't want people thinking that those payments are just gone and you don't have to make them. It works very differently in that you actually are due in full those 6 mortgage payments once that 6 months is over, and your 7th month all at the same time after that 6 months period of forbearance, or in this case, really it's a delay of payments is really the situation. It's forbeared for the 6 months and then put back in your responsibility as a mortgage holder, which is not similar to student loans where, they'll forbear your payments and they put it on the, they work it differently where you don't have to pay for it in a lump sum at that time.
So are they allowed to take that 6 months and just spread it out over the remaining period of the loan, or maybe put it on the back end of the loan?
No, it doesn't work quite like that. So when let's say you were to forbear just because you don't have any other option, what your mortgage servicer will want is the full 6 months plus the 7th month. And then if you're not able to do that, which, most people wouldn't be able to, it's a lot of money. You do have the option of spreading that out over, say, a year period or something shorter. They're not going to spread it out over the remaining term of the loan. A lot of this is dependent upon the contracts that are written with the mortgage servicer and Ginnie Mae, who's the agency of government loans. And government loans are the ones that are impacted with forbearance or have the ability to allow for forbearance. But typically it's a shorter period of time that they let you spread it out. You would always want to check with your mortgage servicer, one, if you are going to forbear, what the terms of that look like. Read the fine print, make sure you're understanding the impact of what options you have once that forbearance is over, but typically it's like a year that they're going to let you spread it out.
So if I'm a homeowner and I'm thinking about doing this here because I just don't have the money to pay the mortgage, you mentioned it depends on what type of loan you have if you're able to do it compared to not being able to do it. So what are the type of loans that you need to have in order to be able to have an opportunity to even do this if you wanted to?
Yeah, so typically your loans that are going to allow for a forbearance are your government loans, which would be your FHA, your USDA, and your VA mortgages. Now, again, I'm not the figure of authority for every contract that's written in mortgage servicing, so I'm always going to advise the client or the homeowner in this case to contact their mortgage servicer to get the specifics of their mortgage. But generally speaking, it is your government-backed mortgage loans, your FHA, your VA, your USDA, that's impacted.
Okay, okay. So if I have a conventional loan, then that there's no options for that, or does it really depend on who your lender is?
So, again, you always want to talk to your mortgage servicer about the options available, but for a conventional loan, there is a backup option if your forbearance, if the forbearance is not an option for you.
Okay.
A deferment might be a better option for a lot of people, where they can take the payment or payments that you're trying to avoid paying due to hardship, and they then take them and place them on the back end of the loan. So instead of your loan, say you had a 30-year mortgage that was due to be paid in April of 2030, that's when it was going to be paid off in, and you deferred 3 payments. Well, now it wouldn't be paid off until July of 2030, extending that term for 3 months by deferring, say, 3 months of payments, for example. But deferment would be another option that's available to, say, a conventional loan holder or someone that doesn't want to go the forbearance route. But, again, not every servicer is going to offer these options. Again, you want to check with your servicer to get the right information.
Can you do deferment on the government-backed loans, the VA, USA, USDA, and the VA loans?
You should be able to. These options are typically available in most servicing contracts, but again, it can be servicer oriented. So again, you want to make sure you check with your servicer.
Okay, I would think, I think deferment might be better if you can tack it on to the back end of your loan rather than trying to be responsible for like 7 months worth of loan payments that you didn't make, which you're not going to have if you're out of a job or if you're part-time. So that might be a good option for
Sure.
people like that. But what the message you're saying is it depends on your servicing company, depends on the contract. You should always take a look at that first before you, or have a conversation with them first before you even think about doing this thing.
Correct. You absolutely want to read the fine print over before accepting any forbearance or deferment for that matter. You just want to make sure you understand what you're signing. We're always available to help assist in trying to digest that information and knowledge to make sure you're being put on the right path to help you in times of hardship, because we know it's not easy for people right now, and having a guide, having an expert there to help look through the information and understand it's helpful. But yes, I would certainly say that that's the right way to go about it.
Absolutely, absolutely. So the worst thing you can do is not to pay your mortgage and then call them after the fact asking for forbearance or deferment, correct?
Yes, you always want to make sure that you're making your mortgage payment first, and then if you know you're going to have an issue making the payment, be proactive. Call first to the mortgage servicer, see if there's something that can be done, to help you in a time of hardship. Another option that is possible to help avoid a payment is by refinancing. If you have a job and have income producing activity, we can refinance. Rates are really good right now. And by refinancing, that does allow you to skip a month of payment without utilizing a deferment or a forbearance, and gives you the ability to save money on your payment and skip a mortgage as well, a mortgage payment as well.
Last question for you, and I'll let you go because I know you're really busy right now, Austin. If you do deferment or if you do forbearance, does that affect your credit at all?
So no, it does not affect your credit on deferment, where it puts it to the back end of the loan. The mortgage servicer just reports it as the payment being made on time. Same thing with forbearance. Now the difference with forbearance is the servicer actually fronts the money to make your payments for you, and that's why they ask for those payments to be due once the forbearance time frame is over. So it also just looks as if those payments are being made on time. So
Okay,
no credit impact.
perfect. Good to know. Well, listen, Austin, we appreciate your time. I'm going to put your contact information on the bottom of the screen here.
Great.
Austin is one of our preferred lenders. So if you guys need any
Thank
help
you.
on refinancing or have any additional questions, he's been doing this for quite a while. He can be a great resource for you. I appreciate your time, Austin. Thank you.
Thanks for having me on. Stay safe, everybody. Thank you.
All right.